As a result of the sell-off that occurred on Friday, I observed a great number of individuals claiming that the bubble is already collapsing, or calling the top of the markets. Considering that investors are so willing to proclaim a top on the basis of a little 2.7% loss, I believe that a great deal of positive news is not really priced in. In my opinion, there are still a great number of investors who are hesitant to participate. According to calculations, this liquidation that was initiated over the course of the past 3 days has resulted in at least 19 billion liquidations. However, it is likely that this number is underestimated. Perhaps it is 4 times larger than that. Since the year 2021, it is the largest. On the other hand, as you are aware, there is a significant amount of volatility, which causes what we refer to as collateral cascades. And that is exactly what took place over the weekend. When it comes to investing in real estate, stocks, and cryptocurrencies, there is one lesson that has completely altered the course of my life, and it will also alter the course of your lives as well. At the point in time when everyone else is experiencing fear, you should be the most bullish. At the point in time when everyone else is bullish, you should be the most scared for yourself. So, if we take a look at the dynamics of the market and the emotion of the market, we will see that there is an incredible amount of dread. The sentiment has not changed despite the fact that people were selling in a panic. There were large numbers of liquidations, and a lot of that was manipulated into the market. A number of asset classes saw a decline in value of more than 70%, only to immediately recover and rise again from that point of lowest point. If any of you had purchased any of these crypto assets when they were dropping off of this fundamental freefall that was occurring across the markets, then you would be doing a lot better today than you are right now. This is not the only instance of this happening during this bull run. In fact, it is not even close to being the only one. One of the most volatile months of the year is October, which is believed to be the most unpredictable month overall. Bull runs are simply ridiculous. October is a month that many people like to say, but in truth, October is a tumultuous month. October is by far the most volatile month, and it is living up to that benchmark with all that is going on. If you look at any other month, you will see otherwise. And I believe that this was done on purpose. This is something that I believe is done on purpose because October is always a couple of months before the election cycle.
This is the reason why I believe this.
In addition, this is the time when all of the institutions are attempting to liquidate as many individuals as they can in order to get to the bottom before the major rise. Using this method, they are able to generate the most amount of capital that they are capable of producing in a relatively short length of time. The fact that you are witnessing all of this happening in real time is simply going to make things more chaotic from here on out. In light of this, I would like to broadcast this video clip from Tom Lee, who provides an even more in-depth description of the current dynamics. If you want everyone to view this video, please give it a like. Let's get down to business. JP. Morgan, the largest and one of the most powerful banks in the world, is spending $1.5 trillion into the United States of America. These investments are being made in areas that are going to reinforce the advantages that the United States possesses, which are known as critically important areas. As a result of the fact that blockchain is an endeavor that Wall Street is building products on, we are currently seeing a significant tailwind at a time when the United States is leading the way in artificial intelligence. It is my opinion that there are a great many grounds for investors to maintain their optimism. And while I'm aware that there is a lot of discussion about bubbles, I believe the thing that I would like to continue to bring out is that Nvidia is currently trading at almost 27 times Ford's earnings. On a price-to-earnings ratio, it is still less expensive than Walmart and Costco, which traded at approximately 47 and 34 times Ford's earnings, respectively, during a period in which short-term interest rates are decreasing. To put it another way, that is comparable to an elixir for stocks that is really potent. You have it right. In addition, as you are aware, chief executive officers have not been feeling very confident over the past 2.5 years due to the Federal Reserve's tightening of monetary policy. Over the past 31 months, the ISM has been below the 50 mark. In the annals of history, that is the longest span. I believe that the sell-off that occurred on Friday is providing us with a bit of a present because the jump in the VIX, which was 32%, is the 39th greatest one-day surge that has ever occurred. The return from the one-month meeting accounts for roughly 3% of the total of 38 other cases. In light of this, I believe that the S&P might gain 200 points between now and the middle of November. When it comes to our feelings at the moment, we are not particularly optimistic. Well, according to you, that does not constitute a late cycle at this point in time. Even so, it is a rally that is despised, with $7 trillion sitting on the sidelines in case investors decide they want to invest in stocks. In my opinion, the level of conviction is a measurement that indicates whether or not the market is pricing in an excessive amount of positive news, or whether or not this is the reason to be purchasing gold. Cryptocurrency is the focus of everything. Cryptocurrency is the reason why gold prices are going up, as you discovered, for reasons that are not directly related to cryptocurrency, but you consider the incremental buyer in gold. There are stable coins that are based on gold. Based on gold. When I look at Tether's supply of dollars outstanding, I noticed that it really started to climb around 3 months ago, and it coincided with gold practically going up every day. This is an intriguing link that we discovered, and it is something that we uncovered. Does the expansion of your XRP portfolio come effortlessly to you? To be honest, I am. And that is precisely why I am thrilled to introduce you all to Gemini, the company that is sponsoring today's video. You will receive XRP back on your cash when you use the Gemini credit card XRP edition, without having to pay a yearly fee. A 4% XRP back on gas, electric vehicles, and public transportation, a 3% back on dining, a 2% back on groceries, and a 1% back on anything else are all included in this offer. Due to the fact that it is a MasterCard Globe Elite, you are able to use it anywhere in the globe where MasterCard is accepted. And what I really like about this Gemini credit card is that it makes it simple for you to have exposure to XRP without ever having to purchase it. This is something that I really like. You simply swipe your card in the same manner as you would normally, and then you begin to receive XRP back rather than points or miles. Furthermore, it is simply astounding to consider that if you had been using this card and keeping the XRP for a period of at least 1 year, you might have experienced an appreciation of up to 452.9%. In my opinion, this is a decision that should be made instinctively if XRP continues to follow the pattern that it has been following in the past. Every single one of you who are watching this video is in luck because you are eligible to receive a bonus of $200 XRP if you use this card for the first 90 days and spend at least $3,000. Create an account for the card right away by clicking the link provided in the description or by going to the website gemini.com/levid.com to submit your application and begin earning money right away. In the description, you can find information regarding the rates and costs that apply. Now, let's return to the video that we began. Despite the fact that I cannot say for certain, I believe that stablecoins, such as Tether, could be among the most significant purchasers of gold at the present time. Therefore, those individuals who have been optimistic on gold for such a long time and negative on cryptocurrency and Bitcoin are finally receiving their major rally in gold. And the reason for this is because of the thing that they despise the most, which is cryptocurrency and Bitcoin. You are absolutely correct. At the very least, inside the realm of Bitcoin, due to the fact that I believe that Friday is one of the things that the likelihood that at least part of that selling, or possibly even a significant amount of that selling, happened to be the result of margin calls at that time was something that we were considering on Friday. There has always been a significant amount of leverage in the cryptocurrency market. So when you get beyond Bitcoin and Ethereum, I believe that the volatility and leverage are what have attracted individuals to that area. This is especially true when you look at other cryptocurrencies. In most